one of the best ways to use Stockopedia is to use it to track and improve your portfolio. It really is the best way you can make strategic adjustments, see a full X-ray of your holdings, figure out which ones aren't working for you. So let's have a little look about how we might do that and how I do this on a consistent basis. So first of all, create a portfolio, give it a name, and check the currency in the benchmark and click create. Now this will be a blank portfolio, and immediately you'll want to do either one of two things. You can treat this like a watch list. For example, you might click add stocks and build a watch list. So it might be a few shares that you like, or that you own, or that you just want to track. And you can very quickly create a list. You can also paste in a comma separated list of ticker symbols and click add stocks, and it will generate a watch list for you. But let's have a look at adding transactions, because we can add our buy transactions, our sell transactions, deposits, withdrawals, and dividends. And this gives us a really much more accurate view of, for example, tracking our real portfolio, especially when our broker might not give us an accurate time-weighted return. Now I've got a little spreadsheet I'm going to just import, and I can drag it into this import transactions section. Let me try that. I just need to check all the fields are mapped correctly across type, ticker, quantity, and so on. I can check the securities are all matched correctly. I don't recognize that one. And I can click next, and I can import them all straight into the portfolio feature. It can take a moment as it computes a performance history for the portfolio. And you can see here that we've got the valuation of the portfolio through time. And we've also got a performance history through time. And we can see this portfolio has been underperforming the benchmark that we set up, especially since the beginning. And we might want to start investigating, well, why might that be happening? Now, the first thing I would look at is I'd look at all the holdings against the rankings, and I can see it's sorted for the rank. There are a couple of higher ranked shares, but the average rank's about 30, and there are some really quite low ranking shares. I can look at the styles and see there's a couple of momentum traps, a value trap, a sucker stock, and those are all quite a few issues. One thing I will like to do is click and see the ranks table view, because it gives me a more holistic view of all the different rankings, the styles, and especially the risk ratings. Now, the risk ratings I like to use all the time because I don't really like investing in too many highly speculative shares. Almost half this portfolio is in highly speculative shares. Those are the most volatile shares, and they tend to, as a class, underperform the market. So I tend to try and minimize the number of holdings that I have in them. We can also see, if we look at the sectors, that there's a lot of basic material and energy stocks. So that's a really strong sector loading in just two sectors, which gives it quite a lot of risk. I don't like my portfolios to be that skewed. Let me just show you very quickly the allocation tab, as it's quite powerful. So we can see, if we go and look at this portfolio, that is almost 75% of this portfolio in what we call cyclical shares, financials and basic material stocks. And there's almost no green defensive shares. And that's really one of the reasons. Like in bad markets, you want to own some defensives. So there are really very little healthcare stocks and utilities and so on in this portfolio. Just a big loading on basic materials, energy stocks, and some financials. What we can also see is the style composition here. There are actually quite a few winning style shares, but there are quite a few sucker stocks and neutral stocks, and the rankings of those are really dragging it down. The other thing I can see is that one of the position weights in Trinity Capital is 41% of the portfolio. That's a massive skew to just one holding, and that could be really causing some real drama in the portfolio results. I had said they had like half the portfolio positions in energy and basic materials, but really this big loading in financials is due to just one position. So all of these things, they sort of come together and they give you a real kind of understanding of where you can make adjustments in improving a portfolio. So using the tool, you can track the performance, track the ranks, track the risks, track the styles, track your diversification, and really help you to start reconstructing a portfolio in a bit more of a sensible fashion.